All right, guys, so my objective here is to give each and every one of you every advantage I have, use all of my resources and all of my wisdom, and give each and every one of you the tools to outperform the market year after year, okay? So sometimes you might look through your portfolio and think, I'm not diverse in this area, I'm not diverse in that area. I think quarter three, this past quarter we just went through, guys, is a very, very good reminder of how diverse or how important diversity really is. And it is crazy how many 52-week lows we're hitting right now in so many different areas. So I want to briefly talk about crude oil, okay? And I got to tell you guys, it is not the most exciting industry in the world. I'll be honest with you. Really, most people, including myself, I'm a longtime shareholder of Royal Dutch Shell, but the real benefit to holding that stock, guys, is the dividends, okay? I hold Royal Dutch Shell Class B, and the great dividend payment. Obviously, it's a very well-run company, but most oil companies, they trend directly with the price of crude oil. So when crude oil is on the rise, most of the big oil companies, BP, Chevron, ExxonMobil, Royal Dutch, there's quite a few, and they're moving on the rise with, trending with the price of oil most of the time, okay? For the most part. Not exactly, but for the most part. And so I got looking through my retirement IRA portfolio, my personal retirement IRA portfolio, and I'm very well diversified and have been building a position in oil really since 2009. So I've done very good. I've sold, I try to sell in 20 to 25% gains and kind of use it, like I said, as a trading vehicle, trade in and out of oil positions. But I'm pretty happy with my position. The thing I'm not happy about with, guys, is that crude oil is at a 52-week low. Then I'm going to get into a little bit more detail and show you how I plan to invest in this industry here on the channel for everybody to watch and see. So right here, guys, I got the 1-year chart pulled up on crude oil, okay? And so one big point I want to make, like I said, I've already mentioned it once or twice in the video, everything is getting slammed right now. You look around the stock market, everything is at a very buyable price, okay? And I'm going to kind of compare this channel and our position in oil stocks very similar to Chinese stocks, okay? We're not going to catch the bottom. We are not going to catch the bottom here in crude oil, guys. You're not. But it is at a very good starter investable level, okay? And I do have a method. I'm going to show you how we're going to do it here on the channel. So, and crude oil, like I said, guys, it had a really good 2017. I'm going to pull up the 5-year chart. Here back in 2013, if you want to go back 5 years, oil was well over $100 a barrel, okay? And then, like I said, it dipped down really hard in 2014, recovered a little bit, and then it really dipped down hard in 2015 and 2016. So I remember back then, obviously I did not have a YouTube channel back then, but I remember buying in pretty heavily to Royal Dutch Shell, and I made a video about that last year, but it was into 2017, so it was down here. But I remember in these big dips, I like to take advantage of them in pretty much every industry and load the box. Try to get plenty of diversity in your portfolio. The more diversity, the better, okay? I'll give you an example. I'm a long-term shareholder on Verizon Wireless, guys. Verizon Wireless has been hitting all-time highs into this bear market, okay? So that's one position, like I said, when I pull up my portfolio and look at it, I'm so proud of having about a 27% lifetime gain plus the 5% dividend year after year. I would love to add to Verizon, but right now is not the time because Verizon is hitting all-time highs. So what we're doing is we're searching for things with 52-week lows, and that is what crude oil is giving us, guys. So what's my method for investing into crude oil? Let's start getting into that just a little bit. So like I said, guys, here for the channel, first thing I did, I pulled up the portfolio that I am building for the channel right now, okay? So I pulled out my M1 Finance portfolio. I looked through all these companies, guys, and I said, I need to try to squeeze oil into my portfolio somewhere. And I look around, I look up and down this list, and I want to keep and maintain every single position I have, okay? So I don't want to, take any, we're only green on 2 positions right now because the market's so awful. But all of these stocks, guys, I am just thrilled to death to be buying them on the cheap. So I don't want to move out of any of these positions. I want to stay right where we're at in our M1 Finance portfolio. Very comfortable and very happy here. So I passed on that idea. Now let's jump over to Robinhood. But this ETF right here, guys, the Energy Sector Spider ETF, okay? The ticker symbol on it is XLE. And I really like this stock, guys. I really like this ETF. I'm going to break it down for us. And I picked up 1 share today in my Robinhood account, like I said, as a starter position. So this is just kind of an extension of my M1 Finance portfolio for the channel, but this is how we're going to play the oil industry. I'm going to buy shares of ticker symbol XLE. Now let's jump over, guys. I'll break it down piece by piece for you and show all of their holdings. All right, guys, so here you have it. Everybody loves the spiders. Very reliable ETFs, very good mutual funds. And we're going to take a look. First off, I'm just going to read this little ETF objective, and then we'll move down and start breaking it down piece by piece. So guys, the ETF objective, this fund seeks to provide investment results that before expenses correspond generally to the price and yield performance of the Energy Select Sector Index. Under normal market conditions, the fund generally invests substantially all, but at least 95% of its total assets in the security comprising the index, okay? So right here, guys, this ETF was $100 a share back in 2014. Like I said, that was not a good time to be buying it. But down here in 2016, guys, it was $55 per share, and it's moved up and down. And like I said, as you can see, over the past 5 years, oil is not in a terrible place. It's not in a dip like it was in 2016. But oil is a very tricky industry to play, and you're never ever going to catch the bottom. Okay, you just have to keep investing in every dip you get. As you can see right here, guys, the sector breakdown, 100% of the funds are in oil and gas. That's why I really love this ETF. So it's, there's nothing else patented in there. It is 100% oil and gas companies, okay? Here's the ETF overview, guys, and the inception date goes back to 1998, and the prospectus date, that last one was on September 24th of 2018. Now, let's jump over here and get to the good stuff. Get to the reasons why we are investing into this fund. So, as you can see over here to the left, guys, this company holds 22% of its money in ExxonMobil, okay? So I actually find this ETF to be a little bit, trade a little bit better than ExxonMobil, okay? But you're still getting a lot of exposure to the biggest and best oil company in the world. So I like that. Chevron right here. Chevron is the second one, and I have to agree with that. Chevron's a great company. You're getting about 16% exposure to Chevron, okay? ConocoPhillips and EOG Resources. These are 2 that are always constantly on my watch list, and I keep a very close eye on both of those companies, guys. A lot of people will refer to this fund as the Exxon Chevron ETF, okay? We got Schlumberger, Valero Energy Corp, Phillips 66, Marathon Petroleum, and Halliburton. So we have some outstanding companies. That makes up about 71% of their total holdings. Now, I don't think they have a position in Royal Dutch Shell. So if you wanted to hedge this position a little bit, you could also pick up shares of Royal Dutch Shell plus this one. I think, like I said, oil is at an investable level. Now, is it going to go lower? I think the oil price is going to continue to go lower for a while. All right, guys, and lastly, I want to touch on a couple of things. Let's talk about the dividend yield. So, it does have a really super nice dividend yield at 2.92%. I believe it pays $1.50 per share yearly. So that's a really nice dividend yield. Obviously, you're going to get a better one with a Royal Dutch Shell or a Chevron, but this is a lot more affordable, and like I say, guys, has a little bit more volatility, in both directions, down and up. And another idea too you might want to keep in the back of your mind: if oil prices keep trending down, this might be a very good ETF and a safe ETF to short. Okay, but I'm not really going to get into that. I think it's good time to start building a nice long-term position. But 2.92% dividend yield, I really like that, like a 0.14% expense ratio, so that's not going to cut into your gains very much at all. And like I said, very, very well represented by a lot of the biggest and best oil companies on planet Earth. So this is just another way we're going to diversify out a bit, guys. I've taken a position. I bought one share on Robinhood, and I'm going to continue to build that position in the dips for the YouTube channel. So anyways, that's all I wanted to talk about today. Thanks for watching the video.